Okay, great. Hey, everybody, welcome to tonight's call. This is on Trading 101, the Harmonic Scanner training. Thank you for everybody being on this call tonight. So today we're going to talk about how to go ahead and use the iMarkets Live Harmonic Scanner. And so we're going to go through looking at the Harmonic Scanner and also how to go ahead and input the information from the Harmonic Scanner onto your MetaTrader 4 so you can go ahead and make trades and make money. And so we're going to go ahead and jump into looking at that. So I welcome all the participants, whether you're on YouTube, whether you're on Facebook, or if you're live on the call. Again, we welcome you to this webinar. And so for the participants here, you're muted for now, but if you have any questions, please participate by unmuting and ask whatever questions that you like. So let's go ahead and get started. All right, ladies and gentlemen, this is the iMarkets Live Harmonic Scanner, which is one of the products that iMarkets Live, a Forex trading company, uses as one of their services to go ahead and help you trade. The great thing about the Harmonic Scanner is it takes the thinking out of understanding the foreign exchange market. Okay, so if you're new to beginning, or if this is the first time that you're looking at this, I know it maybe looks like Latin and Greek right now, but I promise you it's very easy to understand. And I'm telling you, a lot of people have made a numerous amounts of money on this. As a matter of fact, I had a 19-year-old that's in our organization, started off with $10 before the summer. In about 4.5 weeks, he made over $12,000 just using the Harmonic Scanner by itself, okay? So guys, it's very, very possible. So let's go ahead and start breaking this down real quick. Let's start all the way to the left, and we're gonna work our way over to the right, okay? So first of all, when you look at the Harmonic Scanner, how you access this is, first of all, you do need to be a member of iMarkets Live. So whoever shows you this video, or if you've got information, please get back with the person that introduced you to iMarkets Live so you can get information on how to sign up for the membership. Okay, and if you don't have any information, you're just running across this online, please feel free to check the information that's going to be below this recording to contact me on how we can get you plugged in to go ahead and make money from the Harmonic Scanner. Okay. So first of all, what you'll do, you'll go into your back office of iMarkets Live, and this is part of the educational package that you get. We have two packages. One will be for $195, which is the educational package, which gives you the iMarkets Live Academy, IML TV, and the Harmonic Scanner. And what we also get is daily swing trades from our CEO, Christopher Terry. Okay, we also have the money making part of it, which is for $235, which is our Platinum Plus package, which gives you this and also many other tools to go ahead and make money with. But we're going to concentrate on the Harmonic Scanner for today. So first of all the way to the left side, it's going to have a list of some key brokers that we use to go ahead and give information to the Harmonic Scanner, okay? You don't necessarily have to have these particular brokers, but the reason that we have these key ones is because we've probably used them more so. Now, just for background information, we do not get any commissions from these brokers. We do not get a cut of anything. We do not recommend one over the other. It is purely your decision on which broker you wish to use. But what I will say is whatever broker that you do use, that you use the corresponding broker here on the Harmonic Scanner with who you have in your MetaTrader 4, which is the application used to execute the trades. Okay, so for instance, I use Trader's Way. So here is the Trader's Way symbol, and today I'll be demonstrating how to go ahead and use this. Now, some people may ask, what's the difference, Shawn, between these different brokers, and why do I want to use this particular one with my broker? Well, because there's a slight difference in the spreads, okay? And the spread is the difference between an asking price and the bid price, okay? And so when you do a transaction, each transaction has a small fee that'll go with it according to the fee, according to the spread that you have on that transaction. So a transaction could be 3 cents, it could be 4 cents, could be 6 cents, it could be 10 cents, depending on the actual product that you're exchanging. In other words, the currency that you're exchanging. So if you're exchanging gold, it may have a higher a higher spread rate, okay? And if you're doing something like Euro USD, it may have a smaller spread, okay? It also is contingent upon the time of day or the volatility of the market. If there's a high volatility, which means there's a lot of movement going on and there's a lot of people inside the trade, then most of the bigger markets like the Euro USD, like the USD JPY, and the Great British Pound GBP and the USD are the three largest markets that you'll trade in, and those spreads tend to be the least, okay? All the other ones may have slightly different or close to minimal charges for that. Also, there's certain periods that, according to the broker that you choose, there may be no fee that you have to pay on certain spreads. So there are some specials out there. So I suggest that you do your research, Google, kind of look at some of the brokers, read some reviews, and then choose the broker that you wish to get. All right. So with that, we're going to look at Trader's Way here. Okay. So this is what we call a binary scanner, okay? And the reason we call it a binary scanner is because it has two time frames that you can look at the chart, okay? And so we have an M15 chart, okay, which actually goes for 15-minute time frames. Each candle that you see, a candlestick, is this formation that you see. It looks just like a candle. And then, of course, you see the little lines above and under, which is called the wick. The candle and the wick, okay? How we define the candle and the wick: a candle, okay, is the activity, the trading activity that's happening. This is where the most volume is happening during that period of time. When you see the wick signifies that the activity is starting to slow down, okay? When you start seeing wicks form, that means the activity is starting to slow down, and it's the possibility that another candle is about to form. Okay, so that's an indicator to let you know that activity is slowing down and that another candle is about to happen, okay? When you are on a time frame, which is a minute, and they go from M1 all the way to M45. So when there's an M in front of it, that means it's a minute, and then the corresponding time after it. So if it's M1, that means each candle is for 1 minute of time. An M5 will make 5 minutes of time. M15 will be 15 minutes, then it goes 30 minutes, 45, and some even have 50 minutes, okay? On the second part, okay, you have H1, H4, and D1, okay? And so this is the secondary part, the binary part of the trading. And so the H1 stands for hour, okay? Hour 1, which is 1 hour of time, 4 hour is H4, and then D1 is for a day. Okay, so that means that each candle, when you're looking at this particular time frame, this is 1 hour of time that goes on. Okay, and then if it's for H4, this is 4 hours of time. Okay, so one of these candles, okay, actually they're made up of 4 of the H1s. Okay, it's combined in this. And then, of course, if it's a D1, this is a whole day. So that means that 24 candles of H1 will make up 1 daily candle, okay? So when we look on the side, just for note-taking purposes, when you look at the M15, this is what we call for very short-term trading, okay? This is what we can call scalping, okay? So when you hear that reference term, it refers to a short amount of time that you are inside of the market and then you are outside of the market, okay? That means you're only getting in for a certain amount of time, and that time may be within 1 to 15 minutes, or it could be up to 30 minutes, it could be up to 45 minutes, okay, depending on that. So typically when you hear scalping or short-term trading, it refers to the minute charts, right? When you hear the H1 to D1, okay, this is for what we call position or swing trading. You'll hear those terms. And again, when you get involved in iMarkets Live and you go through our IML Academy, which is an excellent teaching platform, which is recorded videos, over 60 plus recorded videos to teach you the ins and outs of Forex trading, you'll understand that they will refer to swing trading, position trading. And this basically means that each candle here on the H1 is 1 hour of time. Okay, and so what you're doing is you're going to place a trade at a certain hour in anticipation that in a few hours later it will hit its intended mark. All right. So understand, guys, that when you are on an M15, that the transactions are quicker. Okay. That means you could put in a trade now and 15 minutes later, you can make profit. Where on an H1 to D1, these trades can take anywhere from an hour to several days. Okay. To several days. All right. So I hope you understand that part. Any questions so far? Okay, fantastic. All right, let me close this. Let's move across the chart here. On the top, okay, what you're going to see here, starting on the top left, this is the pair, okay, the pair that you're targeting, the trading pair that you're wanting to involve with. And so as you become more familiar with Forex, you'll understand the, sorry, let me mute.
That's nice.
Okay, as you see on the top, this pair here is CAD, which stands for Canadian dollar, and JPY is the Japanese yen. Okay, the I afterward, you can disregard that. All right, so you just want to pay attention to these 6 letters. So this is Canadian dollar and Japanese yen. The time frame that this particular chart is on an M15. Okay, and if you remember me saying here when we're talking about the binary chart, that means that each of these candles goes for a 15-minute period of time. Okay, the next here is called a deep crab. So what the harmonic scanner does is it scans the market, okay? And what it does is analyzes different algorithms and measurements of patterns that it sees going through the market, okay? So each of these patterns that you see, there's different ones. There's a shark pattern, there's a Gartley pattern, there's a bat pattern, there's a crab pattern, okay? And basically what it refers to is that there's different measurements here of angles that the algorithm picks up, and it identifies the certain shapes and designs. And from there, it gives us a potential of an entry point, okay? And so once this structure is identified, you're looking for the end of that pattern, because this tells us that this pattern has now gone through its process and it's stopped and it's about to start into the next pattern, which will produce a profit. Okay, it's supposedly to produce a profit. All right. So as you get more and more in depth into Forex trading, you'll understand what these waves are. They're called Elliott waves and Fibonacci waves and different things of that nature. And again, iMarkets Live does an incredible job of teaching what all of these measurements and these different symbols and designs represent, so you can understand trading. But for the layman person like myself, when you get started, the main thing that you need to really just understand and how this tool is so useful is paying attention all the way over here to the right side, and it's the colors, okay? And so also, let me go here to the top. I'm sorry. On top, you see these numbers here on top, and what it tells you is for that particular time frame, it has an opening price, okay? It has the highest price that it has reached for that time period, and then it has the lowest price, and then it has the closing price, okay? And so that's what these stand for, if you never knew what these numbers are for, okay? These can help you when you're trying to kind of analyze a chart later on, and you want to say, well, what's the high of today? What's the low of today? And what that means for you is in these designs here, these lines that you see, that these lines identify where the high and low is, so that you'll understand when you're trading, how high will this go? Well, potentially it'll go back to where this high was. And it'll also swing down to this low mark, okay? But we also want to pay attention to where did it previously close, all right? And so this is some useful information. All right, so here we're going over to all the way to the right side, okay? So what we have here is called, first of all, on the top, it's called a stop loss, okay? This is called a stop loss. Okay, the function of the stop loss is when you're inside of a trade, if the trade goes the opposite direction of which you intended it to go, this will protect your investment from going into a extremely negative position. All right, think of this as a safety net. Okay, this is a safety net to keep you from falling to zero. Okay, so it's always important that whatever trade you put in, you put a stop loss in. Okay. Here on the harmonic scanner, the stop loss is already calculated for you. All right. The next place is called the entry price. This is where the harmonic scanner identifies is the zone area that could be optimal for entering into a potential trade. Okay. Now, the thing I want to definitely express to you, which I've had to learn, is that this is an approximation. This is an exact position on the chart, but it also is a zone. Okay. Sometimes it may not go all the way to the entry point. It may go just a hair or two above, or it may surpass it. Okay, so this is a zone area, but this gives us a very good target area to look at to begin getting into the trade. All right, the TP1, TP2, and TP3, these are what we call take profit. Take profit. Okay, these are the positions that you will put into your MetaTrader 4 that will take you out of the trade in a profit position. Okay, so what in essence we're doing is we're waiting for ourselves to enter into this trade at this green line, and then for it to go down and touch one of these lines that is identified. The greater the number, the bigger the profit. But also, the bigger the number, the greater the risk. Okay? So, if you enter into the trade here and you see it's decreasing, it is about to hit this take profit part here, that means you'll make a small profit. Okay, if it hits take profit 2, you make a little bigger profit. If you hit take profit 3, you'll make a maximum profit. Okay, how much profit will you make? Well, that determines 2 factors. Number 1, the amount of money that you have in your trading account, and number 2, the lot size that you assign to each pip or position mark that's made on this particular graph. Okay, so I'm not going to go real depth in about pips and leverage. What I encourage you to do is please go into your IML Academy and review in the basic 1 area about pips and pipettes and how to calculate lots and leverage. That gives you some great insight into that. So you definitely want to study that, because it's important how much money you wish to make as a goal when you're trading and how much risk is involved. Okay, because there is a risk to reward. Okay, so moving on here. So how do you read this? Okay, we take this information, and this is the information we're going to use to make the trade. This is very crucial. So there's 2 ways you can do it. You can write this information down, or you can type it right into your MetaTrader 4. All right, and so what I'm going to do, let's see, I'm going to write it down so I don't have to have you guys worry too much. But first, the stop loss is going to be 88.27912. All right, the entry point will be 88.19507. That is our entry point. We have a take profit 1, which is at 88.1142. We have a take profit 2 at 88.05232, and a take profit 3 at 87.953. Okay, guys, the next part I really want you to pay attention to is when you look at the harmonic scanner, the colors really do have some meaning, and it will help you in being able to put in the correct trade, especially if you're rushing to do something. Okay, so when the candle is blue, okay, this means that it is signifying a buy, that people in the market are buying this particular currency, and as they're buying, the activity is going up higher, higher, and higher. So it is blue, which goes up, and we call this a buy. Okay, and we also call this a bullish candle. When you hear people say a bullish candle, it means they're talking about a blue candle. Okay, bullish blue. The reason they came up with that name is because bulls, when they go ahead and take their horns, they're going to go ahead and go down to the ground, and then they're going to pick up with their horns up in the air, especially when they're running and they want to hit somebody. And so it goes up like a bull. Okay. When you see a red candle, that is going down in position. This is a sell. That means after the buy, it reaches a good price and people begin selling because they wish to make a profit. And so when they sell, this is activity that it's going down. Okay. And so they call this a bearish candle because bears lay down for the wintertime. Okay. So bullish candle is blue going up for a buy. Bearish candles are red going down for a sell. Okay. So that's the candles. When you get into your MetaTrader 4 application, you will see on the bottom, when you're ready to execute a transaction, you will either see blue for buy or you will see red for sell. And so this will tell the brokers which transaction you're identifying. Are you wanting to go up in the market for a buy? You'll push a blue buy market. If you wish to go down for a sell, you'll push the red sell by market in your MetaTrader 4. The next thing, if you're glancing at this, you're going to want to understand, which direction that you want to go into in this transaction, okay? You want to identify this. Is this a buy? Is this going to be a profitable buy or a profitable sell? Here is how you will identify that. The chart won't tell you. You'll have to learn to identify it. And here's how you identify it. You first look at the entry point, which is green, the green color. If you see the take profits, which are blue, underneath the green, if you see the blue underneath the green, this is a sell market. This is a sell. We're waiting for it to come down for a sell. If the blue is under the green entry point, this is a sell. The converse also goes the same in the opposite direction. If the blue is on top of the green, okay, this is a buy. This is a buy. If the blue take profits are on top of the green entry point, this is a buy. Okay, so remember, if it's under the green, it is a sell. If it's over the green on top, it is a buy. And so guys, this correlates with the candles. If you are looking for a buy, which is on top of the green, then you're looking for a series of blue candles. If you have the blue underneath the green, this is a sell. You are now looking for a series of red candles. Okay, so I hope that makes sense. In between, you will have a mix of red and blue because this is the market activity. People are selling, but then when the price gets to a certain point, people are going to start buying. And then when it goes to another certain point, people are going to start selling again. Okay, and this is the activity that goes on until it either goes up in what we call an uptrend or it comes down in a downtrend. Okay, so again, just to recap, your stop loss is your safety net to prevent you from going extremely negative in a transaction, to help you save your money. The entry point, this is the point where you enter into the transaction. The take profit, these are the positions that you want your candle to touch so that you can create a profit. Okay? Again, if the blue is underneath the green position, the green entry point, this is a sell. If the blue is above the green entry point, this is a buy. Now, you'll also know that the stop loss is opposite of the blue. Okay? So that lets you know what direction that you're wanting to go. The stop loss will always be opposite of the blue. Okay? So if someone can please mute your phone, I got some of your feedback. Okay. All right. So far, if anybody has any questions, please unmute and ask. Does anybody have any questions?
Yes, can you, it was kind of back. This is Ngazi.
Hmm.
The, oh, I lost my train of thought. It come back. Thank
No
you.
problem. Just jump in if you have anything. Okay. Anybody else have any other questions? Okay. Next, we'll proceed on, okay, Shawn, where do we put this information? How do I make money from this transaction? Well, here's what the goal is, guys, so you understand when you look at this. And how you make your day is, first of all, as you grow in trading, you're going to find that there's certain pairs that you'll probably like to trade. Okay. There's also going to be optimal times of day that you'll see more activity on a certain pair than you see in others. Generally, if you're going to trade a US dollar, the prime time to trade is going to be anywhere between 8 a.m. actually to 12 noon. Okay, that's where the most volatility or most movement is going on in the market, where you will make quicker profits. And you'll also have a slighter spread cost also, because more people in the market, more activity, which drives the price down. Okay, if you're going to trade the Great British Pound, which is out of London, then the optimal time is going to be in the morning time from about 3 a.m. till about 7. Primarily from 3 a.m. to 5 a.m. is optimal. Okay. And of course, you have the Japanese yen. If you're going to trade that, then there's an optimal time to trade that also. Okay. So please get into your IML Academy, watch the IML TV, learn from the other instructors on what are good pairs to trade and what are the optimal times. And experience will teach you also. Okay, so here's what we're looking for. So Shawn, how do we know we want to trade this? Okay, first of all, when you open up your Harmonic scanner, of course, you're going to go to your respective broker. You're going to open up, and if you wish to trade in a short-term position, then you'll go to the M15. On this particular Harmonic scanner, when you go to the bottom, these are the most recent trades that have came in. As it comes closer to the top, these are ones that have probably passed or expired. So you're going to always want to check the bottom ones first. So here is the highlighted part. I pull it down, and I would look at the ER Euro NZD, which is the Euro and the New Zealand dollar. Now, I already picked this particular pair because before the call, I wanted to catch one that was just starting in the trade. And so this was one of the most newest ones, the Canadian dollar, Japanese yen. So what I was looking for when I open it up, I'm going to look, first of all, where is the D at the end of this pattern located? Has it already came to the entry point, or is it on its way? Well, at the beginning of this call, actually the D was right here where this long bullish candle was. Okay, it had not yet hit the entry point. So at that point, what I'm looking for is, this is what we call a pending order, which means we're going to put this in, we're going to what we call set it and forget it. Because some people say, well, Shawn, I don't really have the time to sit here and watch a harmonic scanner all day. How am I going to make money from this thing? Well, what you do is you take the information, you'll put it in your MetaTrader 4. Once it's put in your MetaTrader 4, you forget it. And you're going to give it instructions on what to do. And I'll get into that here in a second on what instructions and how you give it those instructions. But here, the goal would be, hey, I want the trade to, when it hits this entry point, I want it to enter me into the trade. And then when it comes down to this take profit, I want to make the money. That's the goal. That's why you look at it. If it comes to the entry point and for some reason it goes higher because of something going on in the market, well, the stop loss will protect me so I don't lose any large amount of money. Okay. But the hopes is that it enters into the trade here and then it comes down respectively to hit either a take profit 1, 2, or 3. That is the goal. That's what you want to happen. All right. And so as you look at each different pair, you're going to see where exactly is this D located. Is it before it hit? That's where you optimally want it. You want to catch it right before it goes to the entry point. But it is okay that if it hit the entry point and is starting to move and it just made the turn toward it's take profit, you still have time to get in. Okay, you can get in at any time. If it has not reached take profit 1, you can get in now because you know it's headed toward take profit 1. Or you can put in take profit 2 or 3. So it's not too late, guys, to ever get in a trade. Okay, again, this is only a guide, this is a tool. All right, so now that we got that information, let's jump to the MetaTrader 4. And if you have your MetaTrader 4 already set up, I want you to go ahead and open it, and I'm going to break down how to read the MetaTrader 4 and how we put in this information that we went ahead and wrote down to go ahead and maximize this trade. If you have a live account, you're able to go ahead and get in this trade, and we can show you how you'll make money in this particular trade that's going live. When I put this in, I will probably go ahead and put in take profit 2 or take profit 3 so we can maximize this trade. All right, so let's go ahead and get started. All right, guys. Okay, we first open the MetaTrader app. We'll go into our particular account. All right, this is my demo account, but I am slowly working toward $50,000. So guys, let's go ahead and start off on what the MetaTrader 4 is. This is the application that you download on your Android phone or your iPhone. And this allows you to connect to online brokers to go ahead and execute online trades. Okay, this is what makes Forex so great, because you can now take control of trading on your own and do it from the convenience of your phone while you're at your job, while you're on vacation, while you're on lunch at your job. You're able to go ahead and make money while you're in this space. And so this gives you the option of doing that. So of course, if you haven't set it up, you can add as many counts as you like to your MetaTrader 4. I particularly have about 3 to 4 accounts on this that I've connected, and I use the accounts for the different products and services that we have. I don't mix them up. So I do have one account for my IML Fusion Trader, which is an auto trader that trades for me. I also have another account for my Swipe Trades, which is an application where you can download, and it gives you signals to go ahead and copy and paste into your MetaTrader 4. And then I keep a separate one for trading for the Harmonic scanner. And then I keep another one just to go ahead and keep to trade on my own if I decide I want to, just outside of the products trade. So here we look at quotes. This is where your quotes are. Okay, this is how you see the different pairs that you like to trade. Okay, so we have the Euro USD, which is the European, Great British Pound USD, USD Swiss franc, that's CHF, USD Japanese yen, Swiss franc Japanese yen. Okay, this is gold, this is silver. I even have crude oil. I even have Great British Pound and Swiss franc. Now, if there's a pair that you see on the Harmonic scanner that's not there, so for instance, here's what you do. We're looking for CAD JPY. And so I'm going to look through my group and see, do I have CAD JPY? No, I don't. So how do I add that to my list? I come here to the plus sign. The plus sign allows you to go ahead and add pairs. You have your ECN, which is where you're going to get your currency pairs, and then you have energies where you can have gold, silver, oil, and energy also. Okay, so I open up the ECN, and it's in alphabetical order, and I'm looking for CAD JPY. CAD JPY. Here it is. All I do is tap it, it disappears, and I go back to the prior page, come down to the bottom. Here it is. Okay. Here it shows the bid price and the asking price. The spread is the difference in between. Okay. And just to give you an idea, what I do, guys, is you hit the advanced mode and it shows you the actual pips that is being calculated. Okay, so you take this number, 16.8 or 9 minus the 16.1, and what it looks like is there is a 0.008 of a cent spread in between this. Okay, that's how you calculate a spread. So you know that every transaction is calculated on that 0.008 of a spread. Okay, so we've identified the pair that we wish to trade that corresponds to the harmonic scanner. And so what we do is we select that, we hit CADJPY. Here you have a new order. This is how you'll put in your orders for your trades. You have the chart so that you can actually see the same information that's on the harmonic scanner. You can see it here on your phone, and then the different properties, okay, and then the simple view mode. We want to go ahead and look at putting in this order. So I hit new order, and it brings us to the place where we put in the transactions, okay? So here we start at the very, very top. There's 5 different types of transactions that you could put in, okay? You have a market execution, which allows you to jump in the trade right then and there, okay? It is executing it immediately. So just remember, this allows you to jump in the trade immediately, okay? You have a buy limit, sell limit, buy stop, and sell stop. Okay, I'm not going to go into all the definitions of those. What I do, again, encourage you is go into your IML Academy and it'll explain what each of those are. But these are what you call your pending orders. And so pending means it has not happened yet and you wish to plan it in the future. Market execution means you'll jump into it right now. And so that's the main thing I want you to know right now, that what makes Forex trading online so great is that if you work an 8 to 5 or a 9 to 5 job, you can put in an order, a pending order at 8 o'clock, and you can use the H1, H4, D1, and you could put in a trade, and an hour, 2 hours, 3 hours later, 8 hours later, you could make profit, okay? And you didn't have to watch it, okay? And that's the luxury of being able to trade on Forex, okay? Or let's just say you have a quick amount of time. Let's say you have about an hour before you go into work and you wish to make some money. You can go ahead and do an immediate execution, jump in the trade, and get out of the trade before it's even time to go to work. Guys, we had a lady on a call yesterday that is a doctor, a pharmacist, who was making 6 figures. She walked away from her job about 3.5 months later because she was making the same amount of money before she went to work for a whole day of pay than what she was making at work. So if she was making $400 a day, she made $400+ in the morning before she went into work, all using a market execution, going in and out of a trade. Okay, so guys, that's the greatness of having Forex right there. Okay, so right now, because the market already started moving and we passed the entry point, okay, what we're going to do is a market execution because it already passed the entry point where we could ultimately get in. Now it is moving toward the profit point that we're looking for. So we're just going to put in the information now, okay, and then we're going to execute that. So if you have your demo and you're ready to do it, you can go ahead and do it with me. So first of all, we have a market execution because we're going to jump in the trade now. Here's what we call your lot size, okay? So the lot size determines, depending on how much money you have in your account, this determines how much you wish to risk and how much you wish to make, okay? So again, please go into your IML Academy and study what the lot sizes are and how it helps you to make money and how it can also risk you in losing money. So risk management is very, very important. And learning about this is under the section called risk management, okay? So today I'm going to go ahead and put in actually a 5-cent lot, okay, which actually you time this times 10. This is actually means it's 50 cents per pip, 50 cents per pip. Even though it says 5 cents here, it actually in value means we will make 50 cents for every move that is made, okay? In other words, if we look down here where it says 88.16, every time this moves, if it moves to 17, it'll be worth 50 cents. If it moves to 18, it'll be worth 50 cents. So each time this moves in the direction I wish it to go, I will make 50 cents. If I drop it down, that means each move will be 40 cents. If I made it 0.10, that would then be $1. So that means every time this digit moves, this placement right here, that would be $1 move every time it moves. Okay? So that's in essence how lot size works. Okay? So here, if you can't see it or if you're on your phone, this right here is color coded, guys. So this is very, very simple to use. First of all, this is a red line here. This is where your stop loss goes. It will always go to the left side in your phone, okay? But you'll also know because it has a red line. So red means emergency, means stop. You know, red means all kind of colors, but here it means stop loss. So we'll put in the stop loss. So I'll put in my cursor there, and I will put in the stop loss at 88.279. Okay, and it doesn't give me a place for the other spacing. All right, we want to take profit, and as I said, I'm going to use take profit 2. Okay, well, actually, you know what? I'll go back to take profit 1 because it looks like that's coming on it soon. So I'll go to take profit 1. Take profit 1 will be 88.114. Okay, great. And that's all I have to do, guys. This is as simple as it gets. You just realize what kind of move or what kind of order do you want to put in. We want to jump in this trade now because it's already moving towards take profit. All right. This right here shows the current price. So you see we're at 88.17. We're going to 88.114. Okay. So we're dropping down from 17 down to 11. That's where we're trying to go to. Okay. So that means that's going to be 6. All right. That's going down. It just kind of went up a little bit. So we're waiting for it to go there. This down here also gives you the bid price and the asking price. The difference in between is the spread, like I said. Now, if you guys remember, I told you that if the blue numbers are under the green, and if you can, I want you to type in the chat, what kind of transaction is that? Is it a buy or a sell? The blue numbers are under the green entry point. What is that? Somebody hit the chat for me. Let me see if I can see. Okay. Anybody? Anybody? Is it a buy or is it a sell? It is a sell. I got that. Thank you, Kristen. You are correct. Okay, it is a sell. So remember, I told you guys that it's color coded. So we said for a sell, we're looking for a series of red candles because it is going bearish, which is going down. All right. So would that be a red or would that be a blue? We're doing a sell. It already tells you. So we do a red for the red candles, and it's a sell. So we hit it. Order has been placed in the queue. Order is open. There we go, guys. So we are now inside of the trade. Okay. And we're waiting for the movement to see what's going to happen. So what happens is this will go ahead and start changing colors and stuff. But right now the market is very slow. So it's probably not going to move a whole lot. So of course, let me read the MetaTrader form, what this information tells you. Okay. So first of all, this is the balance that we start off with. Okay. The equity, okay, is going to be the numbers that are down here. Okay. When you open up the trade, it's either going to put you, it's going to tell you how much of that balance is taken up. Okay. How much of that balance is taken up? How much equity do you have inside of your balance? Think of it like your mortgage. If you have a balance of your home, the value of your home, and you're still paying the mortgage, you have so much equity into the balance of that home. So in other words, if you have a $100,000 home and you've already, paid out, let's say you did a line of equity for $50,000, that means you have $50,000 of equity that's out there floating in a home, in a equity line of credit. And that's what you're doing. You're kind of putting out credit and they show you what the equity is. Okay. You have a free margin, but you have a margin level. And so what this tells you is that every trade that you put in is going to take a percentage of that balance, okay? And that number will decrease as you put in more and more and more trades, okay? The goal is you don't want this number to go under 200 if you can avoid that, okay? You don't want to go over 200, all right? And so the margin here, this kind of tells us, and I could be wrong, so I'm going to kind of check back with you on one of our next classes, but I want to say this is kind of the margin of cost that's put on a certain trade, depending on the amount. But I will go ahead and research that just to be sure. But the main numbers that you need to be concerned is what your balance is, the equity, okay? That has a direct correlation to the margin level percent. So if you have a lot of equity tied up, this number will decrease considerably. Okay, so you already see that it's moving. Okay, it's negative, so that means it's moving up. It's not going in our favor right now. What we're waiting for, when it's red, we're still in a loss. Okay, when it is blue, we're going to be in profit. Okay, so now, Shawn, how many transactions can we put in? You know what? You can put in as many as your account can handle. So we're doing a really small amount. So what I'm going to do is I'm going to add another transaction here just so you guys kind of get the idea of how to put in a trade again. So I already did take profit 1. I'm going to go ahead and put in take profit 2 because I feel that this trade not only will hit the first position, but I think it'll hit the second position and I think it'll hit the third. Okay. So let me put in another transaction. So what I do is I hit the plus up here. This is how you add the transaction. All right. And I'm back here. All right. Now I'm going to put in a pending order. Okay, so what is a pending order? That means I want to go ahead and set this up so that when it hits that point, it enters me into the trade. Okay, and I don't have to watch it. Our physical world is full of... Oops, sorry about that, guy. So this time, I'm going to put in what we call a sell stop. Okay, I'm putting in a sell stop because it's going down in the sell and it's going to stop at a certain position, enter it, and keep going. All right. I'm still going to keep it at a 5-cent lot, which means every move is going to be 50 cents. But now I got to give it a price. So Shawn, where am I going to get into the trade? How am I going to get involved in that? Okay. So what I'm going to do is I'm going to use take profit 1 as my entry price because we're already moving toward take profit 1. So there's no point to put the old entry point in there because we've already exceeded that. We passed that. So I want to go ahead and put in the new one. So I'm just transposing numbers. Take profit 1 is at 88.114. So this is where I will get in the trade. I still need a stop loss. But guess what I'm going to do, guys? I'm going to put the stop loss where the old entry point was. Because remember, I'm already moving away from that, okay? And I want to minimize my risk. I still need to have room in case what we call retracement happens. Well, Shawn, what is retracement? Retracement means that the market swings. It doesn't just go in one line direction. It's like a wave. It goes up, it comes down. It goes up, it comes down. But just like the tide of the water, okay, just like when you're at your favorite beach, the tide comes in and tide goes out. Well, it follows a trend like that. If the market is going down, it goes down in waves, just like if water was leaving the beach. But if the water comes back into the beach, it's going to come in at waves. You don't just see water slowly just increasing without any waves. You see it go up and down, up and down. And so you have to have room in your trade for it to go up and down. So a safe place to have your stop loss is usually somewhere anywhere from 30 to 50 pips away. Okay, that gives room for the market to swing around and still go in the direction that you want. If your stop loss is too close, it'll swing up and kick you out of the trade and you'll lose money, but then you'll lose the opportunity for it to hit its take profit and really profit from that transaction. So let me put this stop loss in, 88.1142. Okay, and now, oh, it still had the same one. Sorry guys. Let's see, let's try. I put in the wrong entry. Let's change that. 88. And guys, you can always go in and switch stuff around. I'm going to make that 195. Okay. And then now I'm going to put in take profit 2. Let me see. I have it going to take profit 1 to enter. Ah, there's where my mistake is. All right. So my price will be 88.114. So I was correct, but my stop loss will be the old entry point of 195. Okay, that's what I have now. And so now, hold on, see question. Okay, Lolita, this is very helpful, but I feel like a third grader taking a college statistics class, I will get it determined. Yes, you will. Yes, you will. I promise you it's not as hard. It's not hard at all, okay? It's merely just taking the information, taking the colors and sticking it to the corresponding colors. That's it. If you see the green, this is a green line right here. You just put the entry price here. Well, I'm sorry, you put the entry price up here, you put the take profit, the blue number, you'll stick it right here. So here we're going to take profit 2. So then I'm just going to go ahead and put in 88.052. Okay. Guys, this is it. I really don't want to complicate. I want to make it as easy as possible, but I want you to know why things are where they are. Why do I put this price here? What does it mean to me? Because if you understand why it's there, then when you look at the chart, it makes sense to you. It makes sense. Okay. So now here's another safety feature so you guys know. I know, like Letha said, hey, I'm trying to understand it. Well, if you're like me, I had this question. What if I put in the wrong information? What if I put in the wrong trade? Well, guess what, guys? Here's what's set up through our MetaTrader 4. All right. Let's say I put in this information and I didn't select sell stop, because you're like, well, how do I know if it's the right thing? Well, let me put buy stop. Here's what you notice. Down here where it says place, it's not highlighted. So I can't make that mistake. Let me go ahead and put this. Well, is it a buy limit? No, it's not placed there. Okay. Is this a sell limit? Nope, it's not a sell limit. Well, then it must be a sell stop. There you go. It's highlighted. So guys, the system is foolproof. You're not going to be able to make a mistake putting in the numbers and making a wrong trade, losing money. The system will not allow you to put in the wrong trade with the information in the places, okay? And so basically, like I said, we wrote down the entry price. This is the price where you want to get into the trade. That's all this is, hey, where do I get in? I get in right here. I'm telling it where to get in. Okay, well, I want to make sure I protect my money. Well, where do I put, my stop loss? Well, here's where you put it. In the Harmonic scanner will always tell you your stop loss. Okay, well, what about the take profit? Where do I want to make money? You either take profit 1, put in that information, take profit 2, put that in, or take profit 3, and you put that in. And that's it. Now, we're waiting for it to do something now. This is going to be pending. So let me hit place. Order is open. It gives me a receipt. Now look, hey guys, look, we're in profit. Blue money, this is good. This means we're in the right direction, okay? All right. Now, if you see on top where it turns blue and red, okay, when it does that, that means that you're out of profit mode because you're probably in the spread part. Now, what's a spread? What's spread? Spread is really what you pay the broker. The broker's going to take their money off top first. They want to make sure they get paid before they pay you, okay? But as long as it goes back blue, you're in profit mode. So that means my 31 cents cleared what I'm paying the broker. Well, guess what? 31 cents minus 8, okay? Somebody do that math. That's going to be the spread that is paid to the broker, okay? That's the spread. So if you ever want to know, you take that. So that's what, 20 cents? 23 cents is what goes to the broker first, and then the other part is your profit part, okay? So you're seeing teeter-totter right at that break-even point, okay? Now, down here, the sell stop, This just means it's waiting. It's waiting for it to hit that next point. And if you ever forget what you did, you just tap it and it has a receipt. It tells me, because sometimes I put it in, I'm like, well, what did I, wait a minute, is it where it's supposed to be? Wait a minute, the sale limit, okay, good, okay, take profit, okay, good, okay. And then you see the price where it currently is. And so all that you can tell. All right, guys, that's as hard as it gets. Taking information and sticking it in. That's it. It's going to do what it's supposed to do. Now, what if you say, man, I did make a mistake. I don't want to be in that trade. You come here to the corner of your screen and you take your finger and you just slide it. Whoop, that's not what I meant to do. Okay, good. You slide it over and this opens up. Okay, this is how you close your trade, because some people say, oh my God, I jumped in the trade. How do I close it? You slide it over. Let me do it again. All right, I slide it over and it comes out like that. It just slides in and out from the corner of your screen with your finger. You use this to close it. You use this to modify it if you want to change your stop loss, if you want to change your take profit, which you cannot change after the transaction is started. You cannot change your lot size. You can't say, oh, it's about to make some money. Let me go ahead and increase the money so I can make this big dollars. It won't allow you to do that, guys. Once you set that, that's set. And this here is for your chart. So now you want to see the chart, okay? So let's hit it. Now, I know I got a lot of jibber jabberish stuff because I kind of color mine a little different, but hopefully I can show you just a little something. All right, let me spread it out a little bit. Well, you can't really see it, guys, but once you put in the trade, depending on what your screen looks like, it's going to have, on mine, it has a little dotted blue line. That's where it shows me where it's going to enter in, because I put in a pending order. So it's going to show me when it hits this line, that's when I get in. Underneath it is another red line that'll say TP, and it shows me what my take profit is, where is it going to hit. Okay, and then SL is going to show my stop loss. So if it goes back the opposite direction, then it'll kick me out of the trade. So when I'm out and I'm driving, I want to see what's going on. I just kind of watch it and I'll see if it's going toward the point or not. Okay, so it's a lot of busyness on my screen, but that's basically it. So now let me go back to the Harmonic scanner. Let's put this in a visual to see where exactly am I with this, because it's showing that I'm -9 cents, which means I'm going in the opposite direction. So let me go ahead and switch out of that real quick, and then we're going to conclude this here in a little bit. Okay, hope you guys can see my screen, but here's what happened. Okay, we got in the trade somewhere right around here. Okay, because we've seen it coming toward this take profit one. That's what we're anticipating, that it comes to the take profit one. Now, when, we're not sure. We're waiting for it to swing back down. So it was coming closer here, where that's probably where we were in the positive, where you saw the blue numbers, because it was coming down toward the take profit. But it started going negative because now we're inching up this way. Okay, so it's kind of bouncing right now. That's what it is. It's kind of consolidating is what they call it. Is kind of determining which way does the market want to go. But because of the Harmonic scanner doing the analyzing for us, we don't have to worry about that. We're waiting for it to come on down and hit this point. Okay, so that's basically it. That's why we use the tool, guys, because it takes a lot of the thinking away from you. And so as you become more in tune with trading, you'll understand what a lot of these things are. But for now, the only thing you really need to pay attention to are this information on the side, just paying attention to the colors. Make sure you take the stop loss, you put that in under the red line in your MetaTrader 4. The entry price, when it asks for price, you just put in this price to tell it, hey, when do you want to get in? All right, and then you put this on the green line, which is your take profit. This is where you make your money. You don't put this number in, guys, you're not going to make any money. It's just going to keep going, 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 and it's never going to stop anywhere. So you have to put in a take profit somewhere, okay? And so, guys, this is how, like I said, somebody made $10 and made over $12,000 just a matter of weeks. So, all right, so let me go ahead and check the notes out here, okay? All right, Charlotte. I do too, and I have gone through IML Academy videos twice. Just keep learning, and keep learning. That is it, Miss Charlotte. I'm telling you, she's one of the leaders here on our Team Wealth Builder team and iMarkets Live, and I'm telling you, she is such a great asset to the team on understanding the technological part, and she's starting to learn that trading. So, guys, you know, trading is not the most simplest thing, but it can be easy. And what I want to say is that iMarkets Live does such a great job with giving top of the market education that you could, you know, couldn't compare with anywhere out there. I was willing to pay $12,000 for this same education. And guess what, guys? We get this for $235 to learn how to make hundreds of thousands of dollars in the foreign exchange market, all from the luxury of your cell phone, okay? And that's without you having to recruit anybody. You don't have to sell anybody. This is just making money. But if you decide that you want to share this with somebody, guess what? If you share this with two people that want to learn just like you, guess what? Your monthly tuition for learning this education will be free. And you get to learn and make money for free, guys. So let me see if there's any more questions here. Okay, okay. Better than anything out there, and is getting better and better. Absolutely, Miss Donald. Absolutely. So with that being said, guys, this concludes the harmonic scanner training, but I am going to open it up for any questions that you may have. And I'll just keep this up in the meantime and see if anybody has anything. Let me, you know, unmute the call and see if anybody has, or if you can, go ahead and unmute your line. And if you have any questions, just let me know, or you can type it in the chat.
Hey, Shawn, it's Charlotte. I just want to say thank you, number one, for being patient with me. Kept getting dropped with the internet and everything. I dropped like 3 times tonight. The struggle, right? But I appreciate you taking the time. I know I had recorded this, and it seems that you know, from time to time, you know, you feel like you're lost when you're in your trading journey. And this really helped out a lot. You got some questions answered to me that I hadn't that I had written down, like I need to go and learn this stuff over and over again. But you helped to bring it to a greater understanding tonight. So I do appreciate it, especially with this harmonic scanner, because of all of the good news that I've been hearing about people making life-changing trades with it. And so I've had a few successes, but I want some more successes, and just so that everybody, just for you to know, and for everybody to know, I'm working on getting I saw a video this past weekend of someone setting one up on an Amazon web server. So I'm going to be setting up one on an Amazon web server and having it set up so we can know when a new pattern is coming through. A couple of integrations with GroupMe. So just for Team Wealth Builders, I will be setting that up. That's my weekend project. So looking forward to telling everybody when that's up and running.
Fantastic, fantastic. And Charlotte, we really do appreciate you being on the team. You bring a lot of energy and insight and knowledge, so it's incredible, incredible. Does anybody have any other questions? Please feel free to ask whatever, guys. This is a learning platform right here, so I want to be able to take whatever fear that you have away and just spend time with this tool. I promise you, this tool alone that's in iMarkets Live, it can making 6-figure income just following these trades. Most of these trades, guys, hit about 90% of the time. I'm going to say it's 90% accurate. And for me personally, I stick to the H1, H4, D1 patterns because they seem to be just a little bit more accurate. And everyone that I've pretty much entered have always hit at least the take profit 1s and 2s and a majority of the take profit 3s. So I definitely encourage you to get into your IML Academy, learn the harmonic scanner, spend some time, and put in some trades. And definitely practice on your demo. And as soon as you feel comfortable, put in some live trades and start making some money. Anybody else have any questions?
When is the next class?
I don't know. Whenever someone decides to request one.
That would be easy.
Okay, fantastic. Ms. Lolita, you have any questions? I know it kind of took a little bit, but it's really just spending time with it. Do you have any questions, or is it starting to click a little bit?
No questions. Yes, it has clicked a lot. I want to say thank you because tonight I'm a little bit further along than I've been in a month. It just lets me know that I need to go back to the academy and just continue to learn. I'm excited. I'm not overwhelmed. I'm just excited, and you have made it a lot more easier for me tonight. So I want to say thank you.
Not a problem. It's my pleasure. I definitely appreciate that. Fantastic. Okay. Anybody else got anything? All right. Let's go ahead and stop sharing that.
How do we get the recording?
I'm going to go ahead and download it, and I'll probably have it on YouTube. I'm actually going to go ahead and use this as YouTube. So you guys are officially on the YouTube channel. So Team Wealth Builders. So with that being said, guys, if you have any more questions, anybody, anything else? All right, all right. Well, we're going to conclude this class. Again, I'll download it and I'll put into our group me the copy of the YouTube video so you guys have access to it. And again, if you wish to have some more one-on-one coaching on the Harmonic Scanner, please feel free to group me and send a message. For those out there on YouTube, if you're checking this out, we encourage you to definitely go ahead and check out iMarkets Live at imarketslive.com. and get some more information. And again, the person that referred you, please get back with them and ask them about the Harmonic Scanner. Ask them how can you get involved using the Harmonic Scanner, especially if you're new to Forex trading. This is definitely an excellent, excellent tool to begin using. And again, I always go back to it, and I've always been successful using the Harmonic Scanner for my position trading. So with that being said, this is Shawn James, Team Wealth Builder out of the Atlanta market under Dr. Jewel Tankard. Dr. Jewel Tankard team here, which is my chairman, 25 here in the Atlanta market. And if you have any questions, again, please contact me with the link underneath the video. Thank you and have a great evening.